Welcome to the latest episode of Quest for Twice. The earnings season is wrapping up. So in this episode, I will provide the final updates on two companies. One is Boston Beer, the other one is Mercado Libre. So for Boston Beer, the Q4 sales was disappointing. As shown in this table, the barrels sold in Q4 last year was 1,467 barrels. That's 25% less than 1 year ago. So for the full year, the sales grew by 15% from 2020. The management also gave a 2022 outlook. The volume growth is guided between 4 to 10%. It's down from previous guidance of mid-single to low double digits. What's important is that the growth is based on 2021 sales. So the Q4 sale decline reduced the base for the multiplier. So then the 2022 sales is actually down more than the percentage is suggesting. The price increase is guided between 3 and 5%. That's a slight reduction from the previous 6% as an upper bound. The gross margin is guided between 45 and 48%. That's unchanged from previous guidance. So at least that's stabilizing compared to 2020 and 2021. What's behind the guidance and the disappointing Q4 sales were the decelerating hard seltzer sales. That's decelerating even faster than the management previously forecasted. So based on the guidance management gave, then the 2022 revenue growth will be about 11% at the outlook midpoint. The gross margin will see a slight recovery. So the stock price declined by 25% year to date. Now it's hovering around $380 per share. So is the stock price decline proportional to the darkening business outlook? If we look at the EV over 2022 EBITDA, now it's about 12.3. So I would argue that's cheap for a growth stock because 2022 growth outlook is about 11%. So that's still growth. Of course, it's all about how fast the future growth will be, and the growth has been decelerating. The historical EBITDA CAGR is 12%. So in this graph, I plotted the forecasted 2022 revenue against the revenue in the last 10 years. So will the revenue grow? I believe it will be based on the historical growth trend. And I believe the historical growth was driven by the smart marketing and selling expense as an investment. In the last several years, the management rolled out truly hard seltzer and that was a huge hit. And that's not just by coincidence. That's partially driven by the smart marketing investment. I believe there is better than even odds that the management can continue to drive the revenue growth in 2022 and beyond, even at a lower pace. So let's quickly review my original investment thesis and risks. Originally, I believe Boston Beer was a high growth company that is fairly valued. At this point, I would say it may not be high growth, but it is a growing company and that is undervalued. That's because hard seltzer is not going away. I believe people will continue to drink it. The 2021 15% shipment growth is still high growth. So if future sales can grow 5% annually, then the current valuation level is justified. I think the odds are good that the future sales growth will exceed 5%. So what are the threats and opportunities? As I mentioned in my deep dive, the gross margin and EBITDA margin will improve once its own facility comes online, and that's on track. In the midterm, brand asset will grow from continuous marketing and sales investment. That's also on track. However, a red flag is management credibility because they consistently underestimated the pace of the hard seltzer deceleration. So my confidence in the management is not that strong either. Therefore, I have relatively low conviction in Boston Beer as an investment. On the other hand, Mercado Libre is doing great. So in the latest quarter ending at the end of 2021, Mercado Libre has 82.1 million active users. That's 11% year-on-year growth, and it's also growing sequentially from Q3 last year. Both its e-commerce and the fintech segments are growing very nicely. Now the fintech segment is about 36% of the total revenue. It's growing in both its on-platform and out-platform transactions. But the total payment volume of marketplace is a higher percentage at 66%, up from 58% 1 year ago. To me, that's very good news because that means people not using the e-commerce of Mercado Libre are also just using the fintech products for its own merit. So more people are using it in more ways. So as a result, its off-platform fintech revenue is growing very fast. It almost doubled from 1 year ago. At the end of last year, the fintech users has about almost 35 million. That's a 23% growth year on year. So Mercado Libre has a fairly straightforward growth plan. On the e-commerce side is to invest in logistics and bring in more buyers and sellers and its own first-party products. On the fintech side, it just continue to penetrate and also have existing users to adopt more of its products because apparently they bring value to the customers. So the top graph shows the revenue history from 2014 to 2021. As I mentioned earlier, both segments have been growing very nicely. The fintech part has been growing very fast in comparison. Also, it's nice to see the gross margin has stabilized above 40%. I believe that's because of the heavy lifting of logistic network investment has been mostly built out. So if we look at the bottom chart, the managed network penetration was 64% in Q3 2020, and it sequentially went up and reached 89% in Q4 2021. Similarly, the same day plus next day delivery is a share also has been increasing from 45% in Q4 20 to 59% in Q4 2021. So that's just a demonstration of the effect of the Mercado Libre's investment in logistics. That is driving more and more users to go on Mercado Libre's e-commerce platform. As I mentioned earlier in my deep dive, this is a classic Amazon playbook. Fast delivery and more first-party products will drive gross merchandise volume and ads revenue. So and have a very strong network effect and wide moat. The fintech segment growth is even more impressive. So the top bar graph shows the total payment volume by quarter. It grew from 14.5 billion in Q3 2020 to 24.2 billion in Q4 2021. The dark blue section of those bars represent the volume in the digital account. So those are not tied to e-commerce. And we can see that in the latest quarter, the volume was 7.1 billion. That's so impressive if we compare that with the total payment volume in Q3 20 of 14.5. That's a strong indication of the adoption of the Mercado Libre's fintech products by the general public, not necessarily using its e-commerce platform. Another highlight is its consolidated credit portfolio. Those are loan assets and will generate interest income. Again, that's qualified as an explosive growth from $284 million of loan book in Q3 20 to 1.7 billion in the latest quarter. That type of growth is just mind-boggling. This graph shows the historical revenue against the marketing and the selling expenses. So we can see the marketing and selling expenses going up generally with the revenue increase. So if we look at the marketing and the selling expenses as an investment, then we can calculate the return on invested capital before tax. And that ratio was 13% in 2019 and 2020 and reached 20% in 2021. Part of that reason was because of flat marketing and selling expense investment in 2020 compared to 2019. That's because of the pandemic. Mercado Libre just had a lot of natural appeal to the citizens in Latin America because they can go on the Mercado Libre's platform and to shop without physical interactions with other people. That's well suited under the pandemic. So in 2021, the marketing and selling expenses went up again. So it'll be interesting to see how much revenue growth that'll drive. I'm optimistic about the 2022 revenue growth because of the strong momentum from 2020 to 2021. Since people have got used to using the e-commerce platform and with the convenience, they will be unlikely to leave. As a matter of fact, I think each existing user will spend more money. And it looks like Mercado Libre has really figured out the fintech part of its business. So I think there will be rapid adoption of its fintech products and drive the 2022 revenue growth. So it's time to revisit my original investment thesis in the deep dive I did last year. Now with the price decline to around $1,100, the price over sales is about 7.8. That compares to 14 for Amazon.com before the pandemic. MELI is like a combination of Amazon.com and PayPal, but subtract the AWS business. The duration to parity is now 5.8 compared to almost 10 years when I did a deep dive last year. So it is getting cheaper and with a lower risk in terms of valuation. It enjoys a wide moat from network effect and high switching cost. So I don't believe its competitors will be able to catch Mercado Libre. I think the original investment thesis is valid, and the valuation level is even more attractive compared to when I originally did the investment deep dive. This wraps up this episode of Quest for Twice. Until next time, happy investing.